All right, let's dive into this Redington Limited's Q3 FY25 earnings report. You've pulled together, the earnings call transcript. We've got the presentation, and we've got some really interesting questions to go through.
Absolutely.
So our mission today is to kind of go beyond just what the numbers say at the very top level, and try to understand really what's going on, what's driving the growth, what kind of strategic shifts are happening, and what does this all really tell us about the health of this company?
Right.
And of course, we're going to try to do this without, getting too bogged down in jargon and all that kind of thing.
Yeah, keep it
Nice and clear for everybody.
decibel. Absolutely.
So we've got that Q3 FY25 earnings call transcript.
Right.
That was held on February 6, 2025. We've got the earnings presentation as well. That was dated February 5th, 2025. And then, this list of insightful questions that you've brought to the table here.
Yeah, I think they'll be useful in terms of guiding us through this.
Absolutely.
Yeah.
So really what we want to try to understand is, how did they perform?
Yes.
What were the key drivers behind the growth?
Right.
And what might the future hold, particularly in areas like cloud technology solutions and, their global operations?
Yeah. All key themes and front of mind, I think, for many investors.
Absolutely. So why don't we just jump right into it?
Let's do it.
And start with some of these Q3 FY25 performance highlights.
Okay, well, I think, what really jumps out at you immediately is the scale.
Yeah.
They've reported their highest ever quarterly revenue, hitting INR 26,764 crores, which is a 14% increase year over year, which in itself is pretty impressive.
So it's not just bringing in more revenue, but the profits also increased, right?
Yes. So their profit after tax, or PAT, reached INR 400 crores, marking their best quarter ever in terms of profitability. And what's interesting is this parity growth of 17% year over year actually outpaced their revenue growth.
Oh.
The overall parity percentage was 1.5%.
Okay.
So they're growing, but they're growing more efficiently, it seems.
Yeah, and that's always a sign of a well-run company.
Absolutely.
When they can, increase profits at a faster rate than they're increasing revenue.
Yeah, that's good cost management right there.
Absolutely. And it looks like they've had some strength in multiple regions geographically as well.
They have, yeah. The UAE showed remarkable momentum with a 26% jump in revenue.
Wow.
And India was right behind them with an 18% increase.
Okay.
And what's also interesting is that they're seeing a profitable growth recovery in the Kingdom of Saudi Arabia.
Interesting.
Which we should dig into a bit later on. And Africa continued its steady growth trajectory.
Okay.
So it seems like, it's not just one region that's propping up these results.
Yeah, that's great.
It seems very balanced across their global footprint.
Absolutely. So how about the different segments of their business? Did they all contribute in a meaningful way?
Well, they all registered good growth, which is good.
Okay.
But the star performer was the cloud business, which delivered an impressive 42% growth in its top line.
Okay.
And this surge was fueled by their business with what we call the hyperscalers. These are the big cloud providers: AWS, Microsoft Azure, and Google Cloud.
Yeah.
And also this increasing adoption of software offered on a subscription basis.
Right.
So this big jump, I think, really underscores the accelerating shift that we're seeing of businesses towards cloud infrastructure. And I think, Redington's focus on hyperscalers in particular positions them very strategically to kind of ride this wave that's going on at the moment in the industry.
So 42% growth is pretty impressive.
It is.
How'd some of the other business units perform?
So the Technology Solutions Group, or TSG, which focuses on providing IT solutions to businesses, also had a very strong quarter, growing by 28%. And this was driven by strong enterprise demand across all the regions that Redington operates in. And also the fact that they closed some big deals. And these deals included things like data centers, storage, servers. So pretty substantial projects.
So kind of the guts of the the IT infrastructure.
Absolutely. And it's both hardware and software. So they're not just focused on one or the other. It's kind of, they're providing the whole package, which I think is quite interesting.
Yeah, you would think that with some of the economic headwinds that we're seeing around the world that maybe
Yeah.
that would be softening a little bit, but it sounds like it's still going strong.
It's still going strong, yeah. And I think that that speaks to the need for businesses to keep investing in their IT infrastructure.
Absolutely. Okay, so let's talk about working capital for a minute, because this is always a really good indicator of how healthy a company is financially.
Yeah.
And it's just, how efficiently they're using their short-term assets and liabilities.
Exactly. Yeah.
So what did the report say about that?
Well, they made positive strides.
Okay.
So their working capital cycle improved to 33 days,
Okay.
which is a 3-day improvement
Okay.
compared to the same period last year.
Mm-hmm.
And their return on capital employed, or ROCE, stood at a healthy 27%.
Okay.
So that's a measure of how effectively they're generating profit from their capital.
Right. Right.
They also mentioned that this improved working capital helped them to lower their interest expenses.
Right. Makes sense.
Less capital tied up, less need for borrowing.
Yep.
And that translates to lower interest payments.
Makes perfect sense. And they've also been good about keeping those operating costs down, it seems.
Absolutely. Their operating expenses, or
Yeah.
OPEX. Growth was remarkably controlled at just 1%,
Wow.
which is significantly lower than their 14% revenue growth.
Right.
So again, strong operational efficiency there.
Yeah.
And, they're able to scale their business without a kind of proportional increase in overhead.
Yeah. It's all looking very good from these top-level indicators.
Yeah, so far so good.
So far, so good. All right. So let's drill down a little bit into some of these key areas. And let's start with that cloud business growth.
All right.
Because 42% year over year, that's just, you can't ignore that.
That's huge, yeah.
So we talked about hyperscalers, we
Uh-huh.
talked about SaaS, software as a service.
Yeah.
But can you talk a little bit more about like what Redington's role is in all this? Like how do they
Sure.
actually operate within the cloud ecosystem?
So they primarily act as a reseller of cloud services.
Okay.
They use a subscription-based model, which is all facilitated through their digital platform. But it's more than just, processing transactions.
Right.
They're actively focused on driving the consumption and utilization of these cloud platforms by end users.
Mm-hmm.
And they also enable, a network of partners to deliver professional services,
Okay.
which are things like, assessing cloud readiness, executing migrations, optimizing cloud spending, which is often referred to as FinOps,
Right.
modernizing applications, and providing ongoing managed services.
So they're not just selling you the access to the cloud, they're also helping companies
Yeah,
use it properly.
exactly. Yeah. So they're really, becoming a more strategic partner
Right.
than just a middleman, which I think is interesting.
Yeah, yeah. So it makes them, a lot stickier too,
Absolutely.
because it's not as easy to just swab them out.
Yeah, it's a deeper relationship.
Absolutely. So what about the kind of the financial breakdown of their different cloud businesses? Like where are they seeing the most profitable growth?
So the gross profit margins vary depending on the type of service.
Okay.
So for the basic reselling of cloud subscriptions,
Yeah.
they're looking at margins of 5% or higher.
Boy.
Programs designed to encourage greater consumption of cloud resources
Okay.
tend to yield slightly better margins in the 6% to 7% range.
Got it.
But the most attractive margins, often 20% or more, come from the professional services that they and their partners deliver.
Okay.
And that makes sense because, these services require specialized skills, and they offer significant value to the customer.
Right. Yeah. So the more they can move, customers into those higher value add services,
Yeah,
the better it is for them.
absolutely. Yeah, the more they can move up the value chain.
Absolutely. And the report also talked about that the cloud business having favorable working capital characteristics.
Yeah, it does.
What does that mean exactly?
Well, unlike traditional hardware distribution, the cloud business requires considerably less investment in working capital.
Okay.
They don't need to hold large inventories of physical goods.
Right, right.
So that lower working capital intensity translates to a better ROCE within their cloud segment.
Yeah.
And that makes it a very efficient engine for growth and profitability.
Right. Yeah, it's all starting to make a lot of sense.
Yeah.
So let's move on to the Technology Solutions Group. That 28% growth, that's pretty significant.
It is.
What were the key factors that were driving that?
Well, the primary driver was strong demand from enterprises across all of the regions.
Okay.
They specifically called out the impact of securing some big deals,
Yeah.
and these included data centers, storage solutions, and server infrastructure.
Okay.
So pretty substantial projects,
Yeah. Yeah.
going on there. And this growth encompasses both hardware and software solutions.
Wow.
So again, they're not just focused on one
Yep.
or the other. And I think it really shows that, despite the economic uncertainties that we talked about,
Yeah.
businesses are still continuing to invest in their underlying IT infrastructure.
Yeah.
And Redington is well positioned to capture that demand.
Right. It sounds like they're playing a pretty important role in enabling that whole digital transformation
Yeah, they are.
that's happening around the world.
Yeah, they're facilitators, definitely.
Absolutely. Okay, so let's talk about working capital again, because even though it improved overall,
Yeah.
there was some discussion in the transcript about some fluctuations within the quarter.
Yeah.
Can you elaborate on that?
Sure. So they did reduce their working capital cycle to 33 days.
Okay.
And their stated target range,
Okay.
or steady state, is between 35 and 40 days.
Okay.
They did note a significant reduction in working capital in the preceding quarter,
Right.
followed by a slight increase in this Q3.
Okay.
And they attributed the lower year-over-year working capital growth to very strong collections.
So, and inventory management at the end of September?
So they just had a really, really good September.
It sounds like it, yeah.
Sounds like it. Okay. But then there was also mention of negative free cash flow in Q3.
Yeah.
What was the main reason for that?
Well, the main reason was that increase in working capital days
Okay.
from 25 days
Okay.
up to 33 days.
So even though it's still within their target range,
Yeah.
it was just that change that
Exactly, yeah.
resulted in that.
Yeah, so it just shows how these fluctuations in working capital management can have a big impact
Yeah.
on short-term free cash flow.
Yeah, that makes sense. But it sounds like they're pretty confident in their ability to manage their debt.
They are, yeah. They emphasize that their debt levels are very much under control.
Okay.
Their gross debt-to-equity ratio is around 0.4 times, and their net debt-to-equity ratio is approximately 0.2 times,
Okay.
which are, considered to be pretty healthy.
Yeah. And it gives them, enough financial flexibility to fund growth
Yeah.
without needing to raise additional capital and dilute existing shareholders.
Right. Okay, so let's move on to some of the specific geographical regions.
Okay.
Turkey's had a lot of challenges economically.
Yes, it has.
So how did their operations perform over there?
So the high inflation and interest rate environment has shown some signs of easing.
Okay.
Inflation has come down to below 45%.
Okay.
And the central bank has actually reduced interest rates
Okay.
to 45% as well.
So things are starting to look a little bit better?
They're starting to, yeah.
Okay. So how did Arena, their subsidiary over there, how did they do?
Well, they manage their inventories very well,
Yep.
and their receivables collection, which helped them to keep their working capital costs down.
Okay.
So they were able to achieve a small profit in Q3.
Okay. That's
which is great news.
Yeah.
And they also saw a significant decline in their revenue growth.
All right.
It reduced to around 5%
Okay.
compared to double-digit declines in previous quarters. So it's starting to stabilize a little bit,
Right.
which is good to see.
Yeah. So it sounds like they're managing things pretty well over there,
Yeah, given the circumstances.
given the circumstances.
Yeah.
But then there was also mention of a pretty big increase in their factoring costs.
Yes.
Was that mainly due to their operations in Turkey?
Not primarily, no. While Arena probably had some factoring costs, the increase from INR 33 crores
Okay.
to INR 71 crores was mainly related to activities outside of Turkey.
Okay.
So they undertook some large deals that involved longer credit terms for their customers.
Right.
So to manage the cash flow,
Yeah.
they sold those receivables to a third party.
Okay.
And that's what factoring is.
Got it.
And that comes with a cost.
Right.
And they did say that the profit margin built into these large deals was supposed to offset these expenses.
Got it.
So it was a strategic decision,
Right.
rather than a broad issue in a particular market.
Okay. That makes sense. All right. Let's move on to Saudi Arabia.
Okay.
There was some, positive news there about a profitable growth recovery.
Yeah.
What's behind that?
Well, the encouraging signs in Saudi Arabia are driven by government and corporate investments.
Okay.
And this is all tied to the kingdom's Vision 2030 plan,
Okay.
which is this, ambitious initiative that's aiming to diversify the Saudi economy.
Right. Yeah.
And involves a lot of spending on technology and infrastructure.
Yeah.
So Redington is seeing this impact in their technology solutions group and their cloud business, which are central to the Vision 2030 objectives.
Makes sense. So Vision 2030 is a huge undertaking.
It is.
So it makes sense that it would be good for a company like this.
Yeah.
So what's their outlook for Saudi Arabia in the short to medium term?
Well, they're anticipating nominal growth over the next couple of quarters.
Okay.
But they do have a more optimistic outlook for the fiscal year that starts in April.
Okay.
So they're expecting the impact of these investments to become more pronounced,
Got it.
leading to stronger growth in the medium term.
Okay. All right. Let's talk about gross profit margins.
Sure.
There was some normalization that happened during the quarter.
Yeah.
What were the main factors behind that?
Well, a couple of factors. The large deals that they secured might have had slightly lower margins,
Okay.
or they might have required more competitive pricing.
Got it.
Also, increased competition
Yeah.
within the technology distribution market
Right.
can put pressure on margins. However, Redington's profitability is still higher
Okay.
when compared to their global peers.
Yeah. Okay.
And they also mention an impact from an inventory provision reversal of about 11 basis points in Q3, which would positively impacted gross margins.
All right. So how did all of this ultimately affect their EBITDA margin?
So their EBITDA margin for Q3 FY25 came in at 2.5%.
Okay.
And for the first 9 months, it was 2.3%.
Okay.
They said they're confident in maintaining this 2.3% to 2.5% band
Okay.
in the next year.
Okay.
And it's worth noting that their calculation of EBITDA includes other income.
Okay. All right. And the report also mentioned the divestment of Paint It,
Yeah.
which is part of Arena over in Turkey. What's the latest on that?
So they've received approval from the Competition Commission for that divestment.
Okay.
The final step is getting approval from the Central Bank of Turkey.
Okay.
They expect this to be completed in Q4 FY25, and they expect it to reduce interest and finance costs,
Okay.
including factoring.
Right. Right. Okay. So let's talk a little bit more about demand.
Yeah.
What's driving customer demand in some of their key markets like India and the UAE?
Well, in both India and the UAE, they're seeing strong demand in their technology solutions group.
Okay.
And that includes smaller, more frequent deals, and then also the big enterprise-level contracts.
Got it.
Covering both hardware and software.
Yep.
In India, their mobility business, Apple and Android devices continues to be a significant driver for the UAE.
Yeah.
The cloud sector is a major growth engine, fueled by investments from government and corporations in cloud technologies and AI.
Makes sense.
And they also mentioned that the festive season in India provided an initial uplift in consumer demand during the quarter.
Okay, so looking forward, what's their outlook and what's their strategy going forward?
So they are optimistic about their prospects for Q4.
Okay.
Citing, year-end spending patterns in India, a backlog of deals, and the ongoing momentum in their cloud and technology solutions groups for CY25. They anticipate growth across their key segments, which are mobility, driven by AI-enabled smartphones, TSG, fueled by digital transformation, and cloud, benefiting from that shift to cloud infrastructure. They also have a positive outlook for the PC market in the second half of CY25, anticipating a refresh cycle driven by new AI PCs and the upcoming end of life for Windows 10.
Yeah, so lots of opportunity out there.
There is, yeah, and I think strategically, they're going to continue to focus on expanding their subscription and consumption-based models, particularly in cloud and AI, pursuing localized expansion in high-growth geographical areas, and developing more integrated logistics solutions through their ProConnect arm.
Okay, so speaking of ProConnect, how's that part of the business performing?
So ProConnect has achieved stable operations.
Okay.
And it is generating consistent profits.
Okay.
And they're now focused on, moving beyond just freight and warehousing to offer more integrated logistics solutions,
Got it.
including in areas like mission-critical logistics.
Okay.
And the goal here is profitable growth.
Got it. Makes sense.
They are hoping to finalize the sale of a ProConnect subsidiary in Q4 FY25.
Okay.
Although that's, subject to regulatory approvals.
Right. Okay, so how about their renewable energy business, particularly solar?
So that's slowed down due
Yeah.
to regulatory changes.
Okay.
Mostly, the approved list of models and manufacturers, ALMM measures,
Right.
which impacted the import of solar panels.
Right.
But they are adjusting their business model
Okay.
to partner with local solar panel manufacturers
Yeah.
and align with the Prime Minister's rooftop solar program.
Okay.
And they're calling this the Redington Solar franchise.
Okay.
And they seem to be quite optimistic
Okay.
about re-entering this market
Yeah.
in the next fiscal year.
Okay, so it seems like they're adapting to that changing landscape pretty well.
They are, yeah.
Okay, so there was Apple's revenue growth was lagging behind the overall company growth.
Yeah.
Is that something to be concerned about?
Well, while Apple's revenue growth of 7% for the first 9 months was indeed lower than Redington's overall growth,
Yeah.
they did clarify that they are not losing market share
Okay.
within their distribution addressable market, or DTAM, in India
Okay.
and the Middle East and Africa region.
Yeah.
So the difference is likely due to the strong performance in other segments,
Got it.
which are growing at a faster pace.
Okay, so no need to panic there. It's just
No.
other segments growing faster.
Yeah, exactly.
Okay, and then finally, free cash flow.
Yeah.
They did say that it can be volatile.
It can, yeah. It's common for businesses
Yeah.
to experience, fluctuations, especially those with seasonal sales patterns
Mm-hmm.
or large projects
Yeah.
with varying payment terms.
Yeah, that makes sense.
So they do emphasize that you should look at free cash flow over a longer period
Okay.
to smooth out those fluctuations.
Right. So don't read too much into.
I mean,
so-
quarter,
One
right?
quarter. Yeah. Exactly.
Okay. And then any updates on the status of large projects?
So they indicated they've got a consistent pipeline
Okay.
of large projects,
Okay.
particularly data centers, storage, and servers.
Okay.
Timelines vary.
Yeah.
Some close in the same or next quarter.
Mm-hmm.
Others can extend over 2 to 3 quarters.
Yeah.
They don't typically share
Yeah.
details about customers.
Right. Yeah. Confidential.
Yeah, for confidential reasons.
Yeah. Makes sense. So, as we kind of unpack all of this,
Yeah.
we see a company that is showing strong and profitable growth.
Mm-hmm.
Being driven by their cloud business, their technology solutions business.
Yeah.
They're navigating some challenges, in different markets.
They are, yeah. And they seem to be adapting their approach in areas like renewable energy.
Absolutely. Yeah.
So they're focusing on managing that working capital.
Mm-hmm.
And it looks like they're making, smart strategic investments.
Yeah. I mean, I think, their strategic focus on those high growth areas of cloud and AI
Yeah.
is very forward-looking.
Yeah.
And then they're also anticipating those new technology refresh cycles in the device market. And, the details that we got about their performance in different regions, I think were really useful, especially the recovery in Saudi Arabia
Yeah.
and their stabilization in Turkey, I think gives a much more nuanced view
Absolutely.
than just the headline figures.
Yeah. So I think this deep dive really did provide a much, more comprehensive understanding
Yeah,
than just looking at the quarterly numbers.
absolutely.
And I think we really got into the why
Yeah, we did.
behind Redington's performance.
I think so, yeah.
So what aspects of this, stood out to you as being particularly important?
Well, I think
Very interesting.
Yeah, I mean, the strength of their cloud business, I think that's really the standout story here.
Yeah.
And the way that they're positioning themselves to capitalize on that growth
Yeah.
is very impressive.
Yeah.
I'm also interested to see how they navigate some of those challenges in areas like renewable energy.
Yeah.
But, overall, it's a very positive picture, I think.
Yeah, I agree. All right. So what other questions, does all